During the last 1 month, Nifty has been consistently trading above the 25,000 level. Even though Nifty traded above 26,000 mark, it could not break the record high of 26,266 reached in September last year. During the last few days, the market has turned distinctly weak. What are the possible likely trends going forward? Welcome to Geojit Spotlight. An important factor impacting the market is the sustained selling and shorting by the FIIs. It is important to understand that DIIs are buying much more than what the FIIs are selling. For instance, during the last 5 trading days, FIIs sold equity for rupees 15,336 crores. But DIIs bought equity 19,947 crores during these 5 days. So DII buying exceeded FII selling by 4,611 crores. Yet the market drifted down. Why? FIIs are shorting the market big. There is net 1,37,000 short contracts in the system now. A simple question is why FIIs have turned negative about India at this juncture. To get the issue in perspective, let us go back in time. Nifty peaked at 26,266 in September 2024, and the sharp dip in earnings for FY25 to 5% made Indian valuations one of the most expensive in the world. Many other markets, both developed and developing, became much cheaper than India and had better earnings growth. This led to a big change in the FII strategy to sell expensive India and buy cheaper other markets. From October 2024 to 1st November 2025, FIIs sold a massive rupees 3,13,548 crores worth equity in the market. Remember, the market peaked in September 2024. So they sold this more than 3 lakh crores from October 2024 onwards and moved the money to other markets which have performed very well. They are sitting on huge profits and they continue with the strategy of selling in India, mainly because Indian valuations are even now slightly higher than valuations in other markets. Nifty is even now trading at more than 20 times estimated FY27 earnings. So despite the correction from the peak, the market cannot be called cheap. But we can say that the present valuations are in tune with the long-term valuations, even though the broader market, especially the small cap space, continues to be overvalued and therefore continues to be risky. An important lesson from market history is that underperformance will not last long. The last 1 year of underperformance of India will certainly end. Fundamentals are supportive now. GDP growth this year, that is FY26, is likely to be around 7% despite the Trump tariffs. The fiscal stimulus provided by the government, that is the income tax cuts in budget 2025 and the massive GST cuts declared recently, and the monetary stimulus provided by the RBI by cutting interest rates, this has created a perfect macro setting for a consumption boom in the economy. Demand for consumer durables, particularly automobiles, this festival season has been very impressive. Many new records have been set. Earnings will start improving from Q3 FY26 onwards. And there is a high probability that the earnings growth in FY27 can be around 15%. When the market starts discounting this, there will be a rally. There's no doubt about that. So, what should investors do? Investors should always give adequate importance to asset allocation. The risk appetite and financial goals of investors will vary from investors to investors. Therefore, do asset allocation. Decide how much you should allocate for different asset classes like equity, fixed income assets, and gold, and also cash. Those investors with good risk appetite should stay invested in high quality stocks and continue to buy on dips. Focus on fairly valued high quality stocks, particularly those that have come up with good Q2 results and are showing good growth momentum. Q2 results indicate good earnings growth and growth momentum across sectors. Therefore, keep on your radar stocks like Larsen and Toubro, Reliance Industries, Bharti Airtel, HDFC Bank, ICICI Bank, State Bank of India, Bank of Baroda, Bajaj Finance, Ultratech Cement, Titan, Maruti, Eicher Motors, TVS Motors, M&M and similar stocks. Also, watch out for digital platform companies like Paytm and Eternal. Best wishes.